What's up, Nomad Nation? Okay, maybe you're Nomad Army of One right now, but someday you might be watching this and there's thousands of views and you're thinking like, oh, there is a Nomad Nation. There's a few people watching this. And hey, that's Tim there. My name's Tim, by the way. And there's his glare on his forehead because he's got a receding hairline because he's got two little kids and he's a single dad and they're making his beard go gray and his hairline recede. I'm blaming it on them anyway. Maybe I'm just getting old. Anyway, the point is you're here because you want to learn about trading the stock market and you've come to the right place because that's what this channel is about. That's what Nomad Trading is about. I'm a guy just like you guys. Like I said, single dad. I do still work a full-time job as of the making of this video. And then I trade part-time on my days off, which is about 3 days a week. I recently became consistently profitable. It was a huge milestone for me to be able to go several months of making a profit and not have all the red days and not be given money back. So that was a milestone, and I'm celebrating that by kicking off my YouTube channel and starting to teach other people how to get where I am. I'm not going to claim to be a millionaire or the best trader alive because I'm not. I'm not going to show you a bunch of Ferraris and Lamborghinis because I don't have them. I'd have to rent them, and that's not cool. Don't be doing that. Don't be renting that shit. I don't know who you are that's doing that. Not cool. I mean, it's cool on vacation. I've done that, but not cool to pretend like they're your cars. Anyway, so you want to work from home. You want to trade the stock market. This is a great plan. I've flipped houses. I've done affiliate marketing. I've built websites. I've done lots of stuff to make money from home as my side hustle to work in my full-time job. But nothing to me compares to trading the stock market. It hasn't taken, now it's been like 3 years or whatever, but it didn't take me long at the time to really get hooked on it because when you start making trades, even when you don't know exactly what you're doing and you see a little bit of green, I clicked a few buttons, I made $50, $100. That's a big thing when you've never traded before and you start seeing that little green number, that profit number. That's awesome. You just sit there and think, wow, I'm sitting here in my office, just hanging out, clicking a few buttons on my computer, and money just appears in my account. What is that? What is better than that? I didn't have to go to work or punch a time clock or hide in the bathroom with my phone to check my messages because the man's watching me on the cameras. I didn't have to do any of that. I just sat there at my computer and boom, money in my account. That's awesome. Anyway, without further ado, let's jump over to Etrade Pro and I'll show you how to set it up. One thing I did struggle with in the very beginning was finding the place to download the platform at. I was on Etrade and I couldn't find how to download Etrade Pro. So I just went to the chat help box because if you go to help, you can chat with somebody and you just tell them, hey, I want to download Etrade Pro, the platform, and they'll send you a link and you can download it. So when you download it and you get into it, it will look like this. You'll have a big blank screen like this. So what do you want to do with this? You got to get this to have some action on it. You want to be able to trade with it. So the first thing that I do, you're going to want a chart. So you're going to come to Tools and you're going to go to Chart. Now there's two different kinds of charts and I will show you the difference. There's Chart Classic. I'll make it bigger for you. And there's the new chart. This one is going to be more like what other brokers are using. Whenever you see the more typical charts at other brokers look more like this one. And there's benefits to this that there's not to the classic. I use the classic charts, but that's just because it's simply because I've been doing it for almost 4 years. In my E-Trade account, I've had the classic charts. So it's just kind of out of habit that when I trade with E-Trade, I'm trading the classic charts. But if I was going to recommend, I would tell people to choose this. This is the newer chart. You can scroll sideways, which is, that's handy to be able to do this. And over here, you can't do that. You're not going to scroll when you click and move. So I just am used to the classic charts, but like I said, you should probably just go with the newer charts. If you've never had any charts before, then there's no downfall to going with the newer charts. You might as well get used to the new stuff. And I've been thinking about switching over to that on E-Trade as well. I'm just kind of like my old classic charts. But anyway, so you're going to come up with charts like this. For the most part, this stuff's going to be the same. So I'm going to use the classic because that's what I'm used to doing. But they're the same on both. You're going to have, this is your charts. This is your time frame. You can see what's happening. This is currently set on the daily. If you look right here, this is the daily. So each one of these candles represents a day. I'll make it bigger for you. Each candle represents a day. Then down here you have volume, which is how many shares are traded. I like the volume to be smaller. It's important to see the volume, but I would rather see more of the chart. Things that I have also on my chart, and you can set yours up however you want, but if you want to do it the way that I do it, I have under studies, I use VWAP, which is down here. VWAP, value weighted average price, is what it stands for. Basically, it's going to show you the average price, but it's weighted by volume. So the average price, and then if there's a lot of volume, it's going to sway that line to go in the favor of the volume. So if you go to the 1 minute, this is a 1 minute chart. Each candle represents 1 minute, and you have VWAP right here. And a good rule of thumb with VWAP, if the stock is under VWAP, then most people would consider that sellers are in control, short sellers and sellers, and that longs are underwater. If the stock is above VWAP, then typically longs are in control and short sellers might be underwater. So a lot of people, not me exclusively, although I do keep it in mind, a lot of people won't buy a stock unless it's above VWAP because it'll be a little heavier if it's under VWAP. People like to, have as little resistance as possible. So typically buying above VWAP or buying a break of VWAP. A lot of bulls like that. So something to keep in mind. This is a good representation of the overall market. If you look at SPY, SPY, that's S&P 500 ETF. So it's going to be a good representation of the overall market. Why is that important? Because 3 out of 4 stocks roughly follow the market. So if you're in a different individual stock, I can't talk, and it's going down, you can look at the overall market, see it's going down. Yeah, that's because 3 out of 4 stocks will follow the market. In momentum trading, which is what I do, day trading momentum stocks, low float stocks, there's always going to be a couple of them that buck the trend that'll be going up when the market's going down. And that's why I love momentum stocks and why I don't worry about if we hit a bear market and learning to trade a bear market. Well, a lot of the momentum stocks with catalysts and things that I trade in and out quickly are going to be moving regardless of if we're in a bear market or not. So just a little bit of knowledge for you there. But anyway, VWAP is an indicator that I use. I also usually have the 200 moving average on there. That'll be that line right there. And that just means the average of 200 days. And then I usually have RSI on there, which is Relative Strength Index. General rule of thumb with any indicator. These are called indicators. They call them studies in E-Trade, but they're indicators. There's so many of them, and you got to be careful because you start throwing all these out there, And what happens is you convince yourself of what you want the stock to do. If you put enough indicators out there, you're going to be able to convince yourself of anything. If you're looking for a reversal right here and you put enough indicators out there, you can find some indicator that's going to tell you that there's going to be a reversal right here, which in this case, it climbed a little bit. That's great. But I'm talking about, whatever your thesis is, if you put enough indicators out there, you'll be able to prove that thesis correct. And that's a dangerous thing because you can talk yourself into any trade basically, or into holding and hoping instead of getting out. It's just bad in general. So find what works for you. These are the ones that worked for me, and I'll explain why. VWAP and the 200, those are two things that I see stocks react to quite a bit. For instance, this stock here, this is SPY, the market. It came up to VWAP and then it got rejected by VWAP and came back down. I see that a lot with different stocks. You see the stock react to VWAP, come down and bounce off of it, come up and bounce down off of it, things like that. That to me tells me that it's something worth keeping on my screen because enough stocks react to it enough times that it makes sense. Indicators and things are really self-fulfilling prophecies, just like support and resistance. Support and resistance. Why is support where it's at? Why is resistance where it's at on a stock going up and down? It's because enough people believe that becomes the case. If you've got a stock that's come down to the same point, 3 times in any given period, when the stock comes down to that point again, you're going to think, hey, it's been rejected by that spot 3 different times. Well, the other millions of people trading it are also thinking that. So then that becomes the case because you get enough people believing that that's going to be support and enough buyers buying at that support, then it becomes support. Always remember in the market, though, that things are the way they are until they're not. That doesn't make a lot of sense, but at the same time, it does. Support is support until it breaks. Resistance is resistance until it breaks. VWAP works until it doesn't. So basically, use things that make sense to you as indicators, but use them with a grain of salt, so to speak, where it reacts to that. You see that, but you're not going to be 100% all in on that thesis. You're not going to, it's definitely going to break hit VWAP and bounce off. It's definitely going to bounce off of the 200. It's overbought, so it's going to come down. You don't want to get in that mindset that something is definitely going to happen, because as soon as you get in that mindset, the opposite will happen and you'll be stuck. So you always want to be in the mindset of it could happen. It's likely to happen, but not guaranteed to happen. RSI I use just as another indicator as to whether or not something is overbought or oversold. What I mean by that is, you can see here on the RSI, it crossed that top line. I'm not going to get into a bunch of technical terms and things, but if you pull our RSI up, it crossed that top line. That indicates that it's overbought and that it's going to sell off. Well, if you look at here, where the top of that corresponds with this right here, the peak, it also is where VWAP was. So you could look at that and say, hey, it's about to hit VWAP. It's also overbought on the RSI slightly, so it could drop here. So it might be a good place to get short and have it come down. And in this case, that proved to be true. So anyway, that's why I use RSI not as an end-all be-all, but just as a little bit of support for my idea. If I think something might be getting a little bit toppy and I don't want to chase it, I'll look at the RSI. Okay, yeah, it looks pretty overbought. I wouldn't want to be chasing it up here. Same thing with shorting it when it's down here. Okay, it's looking pretty oversold. I don't want to short it down there. I'll wait until I get a nice pop before I short it. Anyway, that's all I'm going to talk about with indicators. You got your time frames up here, 1 minute, and so on, the daily, the weekly, the monthly. that's obviously what the candle is going to show. So a 1 minute, if you have this set on 1 minute for today, it's showing the 1 minute candles for today. If you put 1 day, it's going to show you the 1 minute candles for today. And then here's the line in between. And this is going to show yesterday's 1 minute candles. If you put it on daily, it's going to default to 100 days. So you're going to see 100 days of candles. Each candle is 1 day. Right now, the market's been getting creamed by the coronavirus. We're down, I don't even know, probably 20% or more from the highs. That's a lot. Anyway, so that's the time frames. That's indicators. That's where we're at. Tools. Trend line is something that you might want to use at some point. And all that is you're able to draw a trend line. If you were a trend line trader, you can draw your trend line. Then it breaks that trend. Okay, I don't want to be going long when it breaks that uptrend. Things like that. It can be helpful. I use them here and there. Mostly I'm on the crosshairs, but sometimes trend line. Anyway, that's the charts. So you're going to pull your chart, put it over here. This is what I do anyway. All I can do is show you what I do. Then I'm going to come over here. Actually, I'm going to make that even a little bit bigger. So to me, it's the most important thing. I'm going to come over here to tools, and you're going to get what's called market depth. Market depth is level 2. E-Trade just calls it market depth. So make that a little bit bigger. Okay. You can hide order entry or show order entry. I show order entry because this is where I place my trades personally. Level 2 is going to show you, this is the bid side, so these are the buyers. And this is the ask, so these are the sellers. And then over here is the actual trades that are going through. So when a buyer buys at the seller's price and they have a transaction, it prints over here. These are called the prints. So you can see, if you see a ton of green prints going through, it's likely climbing. A ton of red means it's likely falling, which it currently is. And if you look at the 1 minute. So this is where you would put your ticker symbol in. This is news, which you can click on news and it will show you news right there off of level 2. I need to get this moved off of there so it stops doing that. Okay. So level 2, or market depth, as they call it in E-Trade. You need that. Then you're going to go up here to tools, and you're going to get news. And I put that down here. The reason for that is you want to know what the catalyst is. You want to know what's going on. For instance, we are looking at the news right now for the overall market. So it's going to show you that S&P 500 touches bear market territory intraday Wednesday. Coronavirus spreads. So basically it's telling you that the market is dropping, which you can see by looking at it. It's been dropping all day, and it's at lows of the day right now because of the coronavirus. People are worried about the coronavirus and how it's going to affect the economy, so they're selling and panicking and worrying, and the market's going down. Then you can get into the other thing that I always have on here is Strategy Scanner. This is how you're going to find stocks to trade. I will show you other ways and methods and sites and things to find stocks to trade. And one way is the actual site, stocks to trade. But anyway, as far as on E-Trade and what my setup is on E-Trade, I'll pull a strategy scanner and I will put that down in this corner, down here. Make it fit. Okay, strategy scanner. If you go to predefined right here under strategy, you can see lots of predefined strategies that E-Trade has given you. So if it's one that I use is greater than 5% pre-market. If it's pre-market and the market's not open, I'll be looking at this up greater than 5% in pre-market. What that's going to do is it's going to pull out every stock in the entire market that's up greater than 5% in the pre-market. So, that's pretty helpful to find stocks that are moving pre-market. You can also create in this create new strategy. You can create your own strategy. I have some that I've made. I can give you the metrics for them if anybody wants them, or make another video about it. But one that I usually have is my low float runners strategy scanner. And it's scanning the whole market, basically looking for my criteria of stocks that have what's called a low float, which means that they don't have very many shares available to be bought and sold. What does that mean? Well, it's scarcity, so low float stocks are the ones that are going to be moving like crazy. You can get huge range on them, big moves up and down. What I'm looking to trade most of the time is low float momentum stocks that have news down here that are moving and they have a low float, which means they can move rapidly. So now that you have this set up and these four things, you're going to go up here to links up in the corner of each screen and link one, because this is screen one. Go up here to link one. Down here you can see your screens. So link one on each one of these four things. Now, what does that do? That means that now when your strategy scanner comes up with a stock that it decides is a low float runner in this case, or whatever you're scanning for, and you want to get a closer look at it, you click on that and all your screens are linked. So now by clicking on that right there on your scanner, I don't know why that's so small. Oh, there we go. You click on that on your scanner, or this one's one that's been moving today. I remember watching it. SPEX specs. So you click on that, it links all this. Now you can see it right here on your level 2. You can place a trade and it's on that stock. It's linked the chart with it, and it's linked the news so you can see the news. So like one day ago, they have an offering of 2.09 million shares closed at $275 each. So they had an offering close yesterday. The stock's been moving big the last couple days, actually. You want to know why people trade stocks and why I love the stock market? It's things like this. The stock down here a few days ago was trading at, let's see, the low was 70 cents. And the next day, the high was 5.52. That, folks, is crazy. And that's why I love low float momentum stocks. Let's do a little math on that. First of all, it's important to note that you're not going to nail the bottom and the top. It's not going to happen. I've never once in the years I've been trading nailed the exact bottom and the exact top in a trade. So that's not going to happen. I'm just showing you what's possible just to get you excited a little bit. If you had, let's say, only $500 and you bought at the low of 70 cents a couple days ago, you would have 714.29 shares. So let's call it 714 shares. Then, if you sold that stock at the height of, what was it, 552, at the high of the day a couple days ago when it was really spiking, your $500 would now be worth almost $4,000. That's why we love the stock market. That's why we love trading low float momentum stocks. right there. It's because of the possibility. Only $500 in from market open till the high of day the next day. You're talking $500 into almost $4,000. That is crazy possibilities. You won't get that possibility with your job. You won't get it with anything else, honestly. I mean, it's just crazy possibility. Is that going to happen? No, you're not going to nail the bottom. You're not going to nail the top. It's not going to happen. But it just shows you what is possible. Where else do you have that possibility? Let's say that you just got. Let's look at the 1 minute chart and look at, well, even today, for instance. Let's say that you bought the high of daybreak, which is something I do all the time. So high of day was at 181. Let's say you bought the high of daybreak at 181 right here, and you rode it through the first pullback and up to the top of the second one before the second pullback. You're looking at 181 to somewhere around, you're not going to get the top of it, so let's call it 227. 181 to 227. That's a pretty realistic possibility. So 2.27 minus 1.81. This is today. This is a real stock that's moving today. That'd be 46 cents per share that you could have realistically made if you knew what you were doing. I would not personally be holding through the third pullback, so that's why I say I would be getting out, somewhere around there. Typically, I'll try to hold through one pullback. When it starts to get resistance into a second pullback, I'm usually looking to get out because you don't always get a third spike up here before it starts fading off or a big pullback. So anyway, it's pretty safer way of looking at it. Sometimes I usually will take some off into the first peak and then hold the rest into the second. That's what I try to do. That's the goal. But anyway, 46 cents a share realistically if you bought high of day break and held it into the second peak before the second pullback, you would have 46 cents a share. So let's say that you had like my E-Trade account is I started with $1,500 in this E-Trade account. So let's say you had $1,500. You went all in, which is never advisable by many gurus. But let's be honest, when you got a small account, you do what you got to do to grow that small account. So if you had $1,500 and you went all in and you divided that by your 181 high of daybreak, 828 shares, and then you sold it, you made 46 cents a share. That's $381 of profit. So making $381 on a $1,500 account, and that's a realistic possibility. We're not talking about buying it at the low of the day and selling it at the very high of the day, something that's very unlikely. We're talking about buying the high of daybreak, which you can do, and holding it to the top of the second peak before the next pullback. Very realistic. Lots of people do it every day, and we're not even talking about nailing the high. We're talking about getting out somewhere in here. Plenty of time to get out there. So you're talking about making $381 on $1,500. That's where else are you going to make over 25% on your money in, that probably 20 minutes roughly. Where else are you going to make over 25% on your money in 20 minutes? That's why I love the stock market. I know that I've probably just gone on a long ramble about that example there, but it's why I love the market. It's why it's important that everybody sees that and sees what's possible. I don't want to get everybody's hopes up that you can go right in day one to doing this every day, because it takes a long time to even see what's happening here and where the moves are at, when to get out and when not to. I mean, there's a lot to it, and it definitely takes, in my opinion, at least a year and usually 2 or 3 years of watching the markets all the time and trading to get to the point where you can consistently do this. But it does show you what's possible, and it does get you excited that you can make 25% on your money in 20 minutes, and that's a realistic possibility. for somebody that's been trading for years. Even somebody that has not been trading for years could buy high of daybreak and sell it here, and you're still looking at 20 cents or more in profit. Still pretty good. So anyway, just kind of shows you what's possible. So this is how I have my Etrade Pro set up. On screen 1, I have it like this. This is what I used as my finding stocks to trade screen. I can look at any of these right here. These are all popping up with my screener. I click on it. I can see the chart. I can see the news. I can see level 2. And I know right off the bat if that's something that I'm interested in or something that I'm not. And that is something that comes with experience. It's going to take you a long time to get to the point where you even know that. Because if you don't know what you're doing yet, which, let's be honest, you don't if you're watching this video, or if you're like me the first year or whatever, you don't even know, looking at this stock, that that's not something I'm going to trade. I can look at this right, and within 1 second I can tell I'm not trading that, because it was up in the morning at when the market opened, and it's failed all day and done nothing but fade. So yeah, if you could get short in here, then you'd be good on that. But finding shares too short is another video in itself. It's very difficult to find shares to short on a lot of these low float momentum stocks. If you can find them, that's great, because most of the stocks end up going eventually lower, but difficult. Another stock that I would not trade. Look at this stock, and there's nothing interesting in that is any kind of a solid setup to trade. But anyway, we're not going to get into all that. So what I have is, this is my setup to find the stocks that I want to trade and what I'm looking for. Then I'm going to go to screen 6. This is where I have SPY, usually SPY, the S&P 500 ETF, because I like to be able to see what the overall market's doing. 3 out of 4 stocks follow the market. Then I'm going to have these other 4 screens dedicated to ones that I'm watching closely. So if something catches my eye over here, say BKYL, for instance, I know that's one that's been halted a bunch, been moving like crazy today. All these lines where there's no volume are all halts, where the stock has been halted to be slowed down because it's moving too fast, so they want to slow it down. Anyway, tons of halts. Those are another story too. Dangerous to play the halts, but you can make money with them. So we'll talk about that another day. But anyway, BKYL, if you find that interesting, you look at all this and you find it interesting, then I would come over here to one of my bigger screens and I would type in BKYL, hit enter, and this will pop up. I want to show today's screen. Wait, I must have typed that in wrong. BKYL, BKYI. Oh, okay. Sorry. BKYI. BKYI. That's where I was confused. Anyway, I got my level 2 linked with my charts. So you type it in here. Again, I got link 4 here because it's screen 4. I got link 4 up here, screen 4. These two are linked. Got my RSI, got my volume, and boom, you type that in. They're connected. That's going to show you on your bigger screen what's going on. You can see a lot more zoomed in view. Also, it's important to note that you'll have to set up these screens just like you did the first screen, only I use these as my zoomed in, like this is what when I'm actually trading, I'm going to be looking at one of these big screens where I feel more comfortable, like I can see in detail everything a lot better. So you're going to go up there to tools and get your chart and get your market depth, and then you're going to link the two of them, and then you're going to put any indicators that you want to use on there, and then you've got your bigger screens. So those will be your ones that you're watching closely. If you got a lot of screens, a lot of screen real estate, then you can have one of these screens on each monitor, ideally, and watch them all at the same time. Or if you want to watch more than one stock pretty closely, you could split this and put one screen and one screen and watch two different stocks simultaneously. I do that sometimes, but typically for myself, I don't like to trade multiple stocks at the same time. So I'll look at a stock and, okay, yeah, that's the one that I'm going to trade. So I'm going to be trading and focusing on that one stock. I'm not usually going to be having multiple screens with different stocks all at the same time. Someday maybe I'll get good enough to trade 4, 5, 6 stocks at the same time. But right now, I'm happy to trade one or two and stay profitable. So let's see what else. Something else that you want is order status. If you put your order status up here, and for me, I keep it up here. And all that does is if I were to place a trade, it would show right here that I have the stock on order, or if it actually placed the trade, it would show executed, or it would show that there's a partial position taken and that part of it has not filled yet. And that's something that's really interesting to know, because when you place your order, if you're using a limit order or something and you don't get filled completely and you think you do, then when you try to get out of the stock, you're guessing at how many you've got filled on, and you're trying to get out quick, and it becomes like a panic thing where your numbers don't match up because you didn't get the full fill that you thought you did. So it's important to have your order status and to know if your order got completely filled, or if it got rejected, or if it got partially filled, so you know how much of the stock you're holding and you can get out of it. This would be order entry if you wanted to enter your order on the order entry. You click there and then click order entry, and that pops up. I don't use that myself. I use the actual level 2 because I'm always looking at level 2. The reason you want to look at level 2, especially if you're like me and you're a momentum day trader and you're in and out of stocks quickly, you want to be able to watch level 2 because you want to see if there are walls. For instance, if there's huge buyers in here, like this 10K buyer you can see right here, that's a pretty good buyer. That means that if the stock were to drop to 126, it's currently at 129, it would slow down when it hits that 10K buyer. It just gives you a little bit of support. You might know that, hey, there's a little bit of support there. But keep in mind, it's always changing. I'm just giving you an example of why you might watch level 2. Also, on the other side, if you're getting ready to buy a stock, for instance, if you're going to buy it at, I don't know, you're going to buy it at the break of 143 here, thinking it's going to curl up or something, you would be watching level 2, and you might see that 143, or like right here is a good example, 136. There's 45,000 shares in a block right there at 136. So there's lots of sellers at 136. What does that mean? That means that there's somewhat of a wall. There's going to be resistance there. So when it gets up to that level, it's got to chew through that. Sometimes that'll scare people away, or it'll bounce off of that. If you had like 100,000 share seller here at 130, people are going to get scared by that. They're not going to think it's going to break through, or they might get worried, or whatever the case may be, and it's going to be act like somewhat of resistance or a wall. And it's got to, if it breaks through that, that can be an incredible sign of strength because it's broke through a big wall. But on the flip side of that, you don't want to be buying right into a giant wall. That's just not intelligent stock trading. If there's a big wall, you don't want to be the one buying right into that giant wall because it might get rejected and you've just bought at the top and it pulls back. So level 2 can be very important for that. It's just a way of seeing behind the scenes and seeing, where the buyers are at, where the sellers are at, so that, this is your chart. It's showing how the stock's moving, and this is kind of your behind the scenes on what's going on. If you wanted to place a trade, what you would do is put one there, however many stocks you want to buy. If you wanted to buy one, you'd put one there. This is your quantity. Then this is your type of order. A limit means if you type in there 138, like what's in there right now, you're going to pay, if you were to put that in there and then push play or push buy right now, you're going to buy that because you're willing to buy up to 138, and it's only at 128. So you're going to get filled right away if you buy that. The term is day. The destination is auto. This is the router. So limit 138, that would go through right now. If you decided that you don't want to buy more than or in any higher than, say, 120, because you think it's going to get down to 120, you would put your limit price at 120 and then push buy, and it would pop up and say, would you like to place trade? And you push place trade. You confirm it. Then it's going to put a line here on your screen where your buy order is. And if it gets down to that, it's going to fill it. And if it doesn't, it's not going to fill it. So you can, if you think it's going to get down here, you can place that trade now and just wait patiently to see if it does or not. If you're looking to get in it now, and it's a case of let's get in it right now, you can either put your limit high, which right now it is, and then you're going to get filled, or you can do what's called a market order. Push this to market, then you click buy and click place trade, and it's going to fill it at the market. That's where you're going to get what they call slippage, which means you're going to get filled at their, you're kind of at the mercy of the market maker. So they can fill you kind of wherever they want, in a sense. In theory, it's going to be in the spread here, 126 to 127. That's called the spread. So in theory, if you place a market order, you'll get filled in the spread of 126 to 128. But there is times where this shoots up whenever you click the buy button. It shoots up, and all of a sudden you're getting filled at 135 or something crazy, and then it ends up pulling back, and you're like, what happened? I got filled at the top of it. And well, that's the mercy of the market maker that you're at. You never know, and that's why market orders are quick, but they're also potentially dangerous at times. I usually use limit orders unless the stock's moving, unless I feel like it's a time-sensitive thing. I'm trying to get in and out fast, and sometimes I'll use market orders, but typically I'm using limit orders just because I like to know what I'm paying. And to me, if I miss buying something, yeah, that sucks, but it's not the end of the world. I'll just live to trade another trade. If I put 123 in there and it shoots up quicker than I get filled and I miss it, I'm okay with that. It's not the end of the world. I missed the trade, but there's going to be more trades, so no big deal. However, if I do a market order and I'm using pretty big size and I get filled at the top or considerably higher than what I thought I was going to get filled at, and then it starts dropping, well, real quick, you can be pretty underwater, and that's a lot harder to overcome than just missing a trade. So that's kind of the difference between the orders there. Then other things that you might want to know about, market on close would buy at the market on the close of the market. Stop on quote, stop limit on quote. These are things like stop limit on quote. You would set your limit price and your stop price, which means if you owned stock, like your one stock, and you wanted to stop out if it got lower, like say at 120, you want to stop out at 120, which would be lower than this little lowest point in this dip is 121. You want to stop out at 120. So you would put your stop price at 120, and then your limit price would be the lowest you're willing for that to get filled at. So the stop is going to get triggered at the stop price of 120. Your limit, you would want to set typically a little lower than that. So let's say that, like, to account for slippage, let's say, 118 or 115 or, whatever you feel comfortable with as your limit price. That means it's going to trigger at 120, and you're going to get filled no lower than that price in theory. I will say it has happened to me before with Etrade, where I set a stop and a limit stop at that, and it blew right through that. What does that mean? Well, basically the stock dropped faster than the market maker could fill all the orders, and that really sucks. but it has happened. I don't know. In theory, I don't know if it's supposed to happen. I don't know if they would say, oh, well, that happens all the time. But I know from personal experience, it has happened to me. I've set a limit on quote. I've put it on there, and then the stock has had a huge, quick red candle dropped right through all my stop, and I did not get filled. And then I was scrambling to cancel that order and then sell my stock at that lower price before it had a chance to drop more, which it did end up dropping more. So that can happen. Just be aware. There's times where your stop is not triggered or doesn't get filled for whatever reason, and you got to be on your toes. Then you got hidden stop, which means that market makers can't see it, because market makers can see stops. Does that matter? Not very much to new beginning traders, but if you were using size and you didn't want the market maker to see that you have a gigantic sell at a stop, they sometimes would take that stop out. Sometimes you'll see market makers taking stops out where they purposely drop the price, take out those stops, and then the stock will jump right back up. Happens quite a bit. I'm not a market maker, so I can't speak too much on that situation, but you see it happen. Trailing stop money-wise, trailing stop percentage-wise. That just means that you're setting that stop to where as it's going up, if you don't want it to, if you want to set a stop at 10 cents, for instance, it's going to go up and it's going to keep that in mind. And if it drops more than your stop, more than your 10 cents, it's going to trigger that stop and get you out of the stock. So it's kind of like it's exactly what it says. It's trailing up and it's stopping you out when it gets to a certain point. If it comes back down, it triggers your stop and you're out. So, and you can do it by percentage or by money. That is in effect how you trade. You can short also. You're going to need a margin account and you need to know what you're doing, because it's, to me, a little more risky because you can blow up your account quicker. It can go up infinity, but it can only go down to zero. So if you buy, you can only go to zero. If you short, it can keep going up and up and up and up and up and blow up your account, and you can even end up owing your broker money. So shorting can be risky. To me, I think you should focus on buying, and then when you get profitable and understand the long side and buying, then you start shorting and try making money on the downside. If you were doing that, first of all, you would buy here, you would sell here. If you were just doing a quick buy and a sell and you didn't want to use stops, which I do recommend stops, especially for new traders, but you buy and then you sell. You short and then you cover. So if you think the stock's gonna go down and you can find shares to short, you would short it, and then you would cover when you think the stock's gone as low as it's gonna go and you're ready to get out of it. Most of the time on a stock like this, if you try to short it, I would bet money, yes. It says we are unable to borrow the shares at this time. It's hard to find borrows on these low float stocks, and E-Trade does not usually have borrows on low float stocks to short. So anyway, as far as using the that's a good example of up here you can see that it was rejected. Short rejected, so you can see your order status. So it's a good example of that on your order status. Rejected, short one. So it shows that it could not find it. It rejected your order. Anyway, as far as setting up E-Trade, I think that pretty much covers it. That's all the basics of buying and selling and how to do that on the platform. Nomad Nation, thanks for stopping by. Thanks for watching this video. If you like it, give me a thumbs up. Give me a subscribe, that red button, whatever it is that all these YouTubers talk about. Tell me in the comments what I can do better. Shoot me a message. I do respond to everything. In theory, this is my first video, but I will respond to everything. I don't make any money doing this so far. It just takes a ton of time, I'm realizing. So that's cool. But anyway, if you like it, tell me about it. If you don't, that's cool too. Shoot me some ideas on what you'd like to see me make a video about. I can make a video about whatever you guys want to see in your trading journeys. Until then, as always, nomad life. Let trading set you free. Trading is awesome. The journey is awesome. You guys can do it. I'll talk to you soon. Peace.